Hello and welcome. Good evening, good evening. Hop on in, get your notes together. If you've been following me this week, I've been going live each and every day and going state by state, helping you find the right home equity line of credit for you to implement the velocity banking strategy. On the left-hand side of the board here, I have action items. This is the pregame work that you need to do every single time you're going to go and get yourself a home equity line of credit. You're going to apply. You want to get the right tool. This is everything you need to know in advance so that you are allowing competition to take place so you end up with the best product. All right. So I'm going to assume not everyone watching has seen the other videos. So I'm going to go through the action items each time for those that may be watching for the very first time. The state that we're going to be covering today is the state of Wisconsin. So on the other side of the board here, I'm going to do it live with you, search for banks, and then we're going to compete. The banks that look most attractive, we're going to put them on the whiteboard, and then we'll discuss it thoroughly. I'm going to take you through the main things that I look for on the bank's website before I put them on the board. Once I get them on the board, then we eventually want to narrow down one or two banks. From there, you would call that bank to verify everything on their website is up to date. Everything that they're offering is still available, especially if 6 months from now, a year from now, you watch this video because you typed in how to find a HELOC in Wisconsin and this video popped up. The things that remain true now, tomorrow, and years into the future are these action items. Okay. So ideally, this is the ideal framework for you to get the best home equity line of credit. Specifically in the second position is what this is catered for. Credit score 720 or higher. The 720 number is that magic number that puts you in a tier 1 category or prime borrower, and that unlocks, all the best deals, all the best rates. So almost every single bank, and you'll see as we go through it and in the other videos, almost every single time, that number 720 credit score, that just puts you in a higher bracket, more exclusive club, so to speak, because most people don't have a 720 or higher credit score. DTI, 30% or less, no more than 45%. The minute you start showing a 40% or more DTI, that also puts you out of range of the best products. So if we can get your DTI a little bit lower, and there's different things that we can do to finesse that or manipulate that DTI upon applying, there's different things that we can do to affect that. And it could also just be as simple as you need to pay down some debts first before you apply. So I have many clients that are in that process where we're just simply using debt snowball, debt avalanche, cash flow index, no velocity to accelerate some debts. Then they graduate to the home equity line of credit if they're a homeowner, or if they're not a homeowner, we're looking at credit cards and HELOCs. Okay. LTV, loan to value. Most banks are around this range, 70 to 90%. Some go as high as 95 to 100%. Closing costs, preferably zero or low, $500 or less. But in most scenarios, I can find you a bank that does zero closing costs. Because in some states, it could be a few $1,000. It could be about $1,000. It could be a little over $500. It really ranges. It's quite hard to pinpoint an average. But I would say what's low to me is under $500 based on what I've seen. And then what's even better is zero. Intro rate. We love these. These are like introductory rates when you first get the HELOC. It sort of revamps up the product, oh my goodness, vamps up the results, right? Amps it up in terms of the debts you might be consolidating into the home equity line of credit. For example, prime just got reduced. So prime right now, 7.25%. It was just at 7.5. So now that it's at 7.25, right? We are seeing more and more competition with these intro rates. So I'm seeing intro rates right now as low as 1.99% to around 5.99. And there's a lot of you that have car loans, 8% or more. Personal loans, 10% or more, right? So you're sitting on a lot of high interest debt right now, coming off of a high interest rate environment, which we still technically are in a high interest rate environment, but it is slowly coming down. These HELOCs are becoming very attractive. In some rare cases, you'll see 3 to 5 years. Okay. Interest rate calculation. It's either going to be prime, prime minus, or prime plus. Draw period, 10 years typically. Some go as high as 20. You are absolutely going to want to build a relationship with that bank that you ultimately want to go and apply for. Before you do it, open up a checking and savings, move your banking over there so that when you get the HELOC launched, you immediately go to work. That increases your velocity banking strategy and the success that you'll have. Mobile banking is crucial to the velocity banking strategy, where you can move money instantaneously in and out of the line of credit. So that's very, very important. Last is payment calculation. This just verifies that you are in fact applying for a home equity line of credit when you see the word revolving. If you do not see the word revolving in the terms and agreements, when you talk to the banker, you want to confirm this is a revolving home equity line of credit, correct? Yes, cool. Then you will have a decision. Some banks will give you the decision for interest only payments or principal and interest payments. Some banks will disclose it in advance. They'll say this is a interest only HELOC or this is a principal and interest HELOC. Typically, what we will see is if the home equity line of credit is principal and interest payments, sometimes you get a lower interest rate offer versus an interest only HELOC. Sometimes they will increase that rate just a little bit higher. It's not always the case. Some banks don't make a difference. Some banks do. So if it were me and I had to decide interest only or principal and interest, it's going to boil down to the rate. If I can get a lower rate for principal and interest, sign me up. But if it makes no difference whatsoever, I'll take the interest only because it makes less of a requirement in that early draw period years. So that's helpful. Other than that, let's share the screen. let's dive into the state of Wisconsin. So I have some clients out here that are looking for home equity line of credit, and some viewers that are out of the Wisconsin area. So we have a bank called Summit Credit Union, and there's two Summits in Wisconsin. I found a Summit Credit Union, then there's a bank called The Summit Federal Credit Union. So two different banks, as you can see, two different websites. So here we have a home equity loan and line of credit, special offer for a stress-free HELOC, 0% APR for the first 3 months. That's pretty attractive. Then a low standard variable rate as low as 7%. So what does that tell us? They're saying prime minus 0.5%. So their website may not be fully updated yet over here, because again, prime is at 7.25%. So starting next month, October 1st, if you were to get this product at this bank and you got the best rate, let's say you got this stress-free HELOC, you would get the 0% for 3 months. Instead of being at 7% afterwards, you would be at 6.75%. Because we see here it says variable rate as low as prime minus 0.5%. It says no closing costs or low closing costs. No annual fees, I love that. Or any prepayment penalties, that's cool. So we like that. Notice how that says home equity line of credit. And now they're making the distinction. Interest only home equity line of credit. So more than likely, this is principal and interest payments. I would sign up for this if the interest only HELOC is going to be different in terms of the rate. So it says get all the same advantages of a standard HELOC with the same low rate. Only pay interest secured. Okay. So what does that tell us? They say, hey, we don't discriminate between a regular HELOC and an interest only. Well, that's cool. So now they give us even more information. They go as low as 70%, but let's see if there's a difference. And there is. See how if we do 70% LTV, it could be as low as 7%, prime minus 0.5. Remember, that it's actually going to be 6.75. Or 80% LTV minus 0.25. 90% LTV, prime plus. So oftentimes I get asked the question, Denzel, how much should I apply for on my home equity line of credit when I go in to the bank? My answer is, depends. What exactly are we looking for? What certain parameters do we need? If you need a larger line of credit, according to the amount of equity that's actually in your property, it's going to come at a cost. Typically, the higher the LTV, the more interest the banks typically charge. This is a perfect example of that. If you don't need as much equity, which there's so many cases where we're oftentimes really overestimating, but as long as it has no effect, if 90% LTV is the same as getting 70% LTV, then I'm like, get the 90. But something like this, I would rather get the lowest rate option possible. So let's take our notes. We got Summit Credit Union, at, and I'm only going to put the main details that matter to me the most, 70% LTV gets me 0% 3 months, and then prime minus 0.5%. So I'll be at 6.75%. Afterwards, they said no or low. Closing costs. And then I'm just going to shorten it. MB stands for mobile banking. We know that they have mobile banking. They offer checking and savings. So that is healthy. We like that. Let's take a look at the next bank, which pretty much has the same name. The Summit Federal Credit Union. Let's see what they got. So I'm just writing it down. The Summit Federal Credit Union. Okay. So they're doing 3.95% intro rate, 6 months. 3.95, 6 months. No closing costs. We like that. Okay. No annual fee. We like that. Revolving line of credit. Very good. We got 85% loan to value. 95. So they go from 85 to 95. Don't love that, right? Prime plus. Want to avoid that. As long as we have a HELOC over $50,000, we'll be right at prime. And then under 85% LTV. So that's where that would be the best product with this bank, because every bank, they'll offer a HELOC, but sometimes they may have 5 different types of HELOCs. As you can see, there's 4 different types of HELOCs here with different interest rates. So I'm only going to put the best one that we see here. So 85% LTV, 50K or higher credit limit gets me 7.25%, which is just prime. Not prime plus, not prime minus, just prime. Cool. See if we can get any other information off the website. And we have mobile banking access, so that helps as well. So mobile banking. So both banks so far check most of my boxes. Yep. Very helpful. Let's see if there's any other information we need to know. Don't see nothing. Cool. So far, Wisconsin is coming in strong. Let's look at this one called Credit One. Here we go. 2.99 for 3 months. Home equity line of credit up to 90% LTV, but prime plus 0.5%. No annual fee. Let's see if they have any closing costs. This offer is only available. So they cover California, Florida, Illinois, Indiana, Iowa, Georgia, Minnesota, Nevada, Tennessee, Washington, and Wisconsin. Typically, when you see banks covering multiple states like this, that implies it's a bigger bank. The bigger the bank, typically, the lesser the product. That's typically what you will see. And with my theory that I'm giving you, it's kind of lining up, right? If we come back, what's the offer? 2.99% for 3 months. Then it goes to 8% afterwards, which is prime plus 0.5%. That's their best offer. Question is, should I put that on our board? Probably not, because Summit Credit Union and the Summit Federal Credit Union is offering better terms. One is 0% for 3 months. The other was 3.95 for 6 months. So 3.95 for 6 is cheaper than 2.99 for 3. So we could skip over credit one. Let's see what other banks we can find. UW. See what they got. Got to be careful because it's a lot of the lingo here on this site is saying home equity loan. Do they have a HELOC? Here we go. Man, Wisconsin is turning up with these 0% offers. Very interesting. So 3 months, UW can make it to this list. Can get on the whiteboard, not upset. UW is offering 3 months, 0 interest. And then it says as low as 6.75% after. So that's what? Prime minus 0.5%. So they've already updated their site. Now, let's see what other amenities we get. Renew your draw period up to 2 times for a total draw period of 15 years. Now that, my friend, is very attractive. That's very attractive. So we're gonna put that detail on the board because that could be one of the reasons why you say yes to this bank over another bank if you're in the state of Wisconsin. So I'm just gonna write renew draw period 2 times. So it looks like that'll be in 5-year increments. Look at this. More information. We got no annual fees and no or low closing costs. So no or low closing costs. Access to your line 24/7 in branch. This might be a deal breaker though. This might be a deal breaker. Checks available on request. I don't know if I love that, guys. I mean, they do have a checking account here. So let's say they don't have an app. I wouldn't be upset about that. We would just need to clarify if I can make transfers in and out of the line of credit on the portal, or do I have to go in the branch, request a check, write the check, take the money out? I don't know if I love that. Let's see. How do I access the funds? There are several ways. Boom. Transfer funds from your line of credit to another UW credit directly from our mobile app. So they do have a mobile app. Visit a branch, request checks for your home equity line of credit. So as Velocity Banking practitioners, users, this is our main option to use our line of credit. So this is actually an interesting question. Is it easier to get a HELOC through a credit union? While it may not necessarily be easier to get your HELOC through a credit union, being a member, it should say before. So this is me, Denzel, letting you know you need to have before you apply, become a member. Does have a few advantages. For instance, UW credit union members who need a HELOC enjoy easy and free approvals that don't impact credit scores like a hard pull. Now that, my friend, is an attractive piece of material. Convenience of managing withdrawal and repayment through web branch. Yep, access to free tools. Okay, yeah. UW is coming in hot, folks. So, and they got 100% LTV. So 100% LTV. And did they have, oh, yep, no annual fees. No annual fees. Prime minus 0.5%. Renew the draw period 2 times. 3 months. 0 interest. Not bad at all. Let's see. Royal Credit Union. I believe there was another state where we were looking at, and Royal Credit Union covered that state as well. So yeah, 6-month intro rate. Month. Okay. 5-year draw. Dang. They want to see 780 or more. So that's going to be tough. Plus 70% LTV just to get that 3 month. They do have some closing costs, low closing costs. Okay, 6.75. So prime minus 0.5, but they don't tell me what the intro rate is. You got a call. Oh, here we go. 4.99 for 6 months, 6.75 afterwards. Now, again, they're not going to make it onto the board because we come back to the board. I got a better offer. Summit is 3.95 6 months, and then I have 0% and 0% for 3 months with Summit and UW Credit Union. So, cool bank though, Royal Credit Union. Not upset with them, but we are competing right now. Only the best ones make it onto the whiteboard. Let me know in the comments. This is helpful. This is good. It's helping you learn. Next bank. Capital Credit Union. Let's see what they got. Will they share any info? 10-year draw, 7.25. No intro. Closing costs pretty high. 80% LTV. Max 250K. Credit score 740, even harder to get. So, does Capital Credit Union make the list? No. See if we can find another one. Okay, we got prime minus 5.5. They're not exactly sharing too much information, but do they make the list? No. We have a better offer. Landmark Credit Union. Home equity. What do they got for us? Ooh, 6.25. You know what that is? Prime minus 1%. That's extremely attractive. I would argue in some cases that's better than a 3-month, 6-month, 12-month intro rate. So prime minus a point is extremely attractive in both directions, right? In a declining interest rate environment, it's awesome. In an increasing interest rate environment, you remain competitive. You consistently remain in an environment where you're always getting a better loan rate than other options when it comes to financing things. So, yeah, look, they're promoting it. No or low, 10-year draw. What's the LTV? Okay, 80% LTV. Oh yeah, this is on the board. This is on the board. Let's put it. What was this called? Landmark. Very attractive. 6.25. Prime minus 1%. 80% LTV. Okay. Very low minimum advance. All right. Ooh, it's going to be a little hard to get it though. You got to have a 740 or higher credit score. So that's a caveat, but honestly, I wouldn't mind working toward that. They lowered it a little bit though, so 70%. Okay. Okay, I don't see anything else. But that made it to the board. It sure did. Even though I gotta work for it. If you're thinking long term, not only am I going to use this HELOC to get out of debt, but I'm also going to use it to leverage and invest. Sometimes you got to look at it that way as well. Only on 3.99, 6 months, 7.75. So that's prime plus 0.5. That alone, yeah. That doesn't qualify them. Wisconsin. Interesting. We got Prime. Let's see. That's the only thing we saw was Prime, but my banks on the whiteboard are more attractive. What's Advia? Advia? Credit Union. 90%. Evolving. Low rate. Let's hit learn more. Ooh. It's a little attractive. I think this might make it to the whiteboard. This might make it. 5.9 for 12 months. With Advantage Plus rewards. What does that mean? Unlock blah 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 1%. Okay, so you got to become a member, right? Yep, that's what they're saying. That makes sense. Low or no closing, no annual fee, interest only. Not upset about that. Okay, here we go. Here are the terms. So you get the intro rate promo. That's the 5.9, but it's 70% LTV. So Advia is making it to the board. Why? Look what happens afterwards. As low as 6.15%. Let's learn a little more. Let's see what we got here. Dude, look at this. Minimum credit score, 700 to get this offer. Now there's other following qualifications, right? So it says 1, credit score, 700. Combined loan to value, 70% or below. Minimum line has to be at least 10,000. That's easy. And you need to be a member, Advantage Plus. Estimated monthly payment, okay, 0.9. The APR will revert to a variable rate which is as low as 6.75% as of 9/18. Well, hold on, because where does this number come from? Is that a typo? Current non-promo. Or are they saying intro promo could be as low as... No. Okay. So if you're not in Advantage Plus rewards, you get 6.15. After the promo is done, you can be as low as 6.75. So that's prime minus 0.5. Okay, so I might have got a little ahead of myself. That's why it's important. You got to read. You got to read. Prime plus or minus a margin. There you go. We figured it out. Ladies and gentlemen, Advia Credit Union has made it to the whiteboard. So we got Prime. And again, I'm looking at their best HELOC. Prime minus 0.5. 5.9%, 12 months. 70, 80-ish LTV. I think it was 70. Then no closing. Let me verify that again. 700 minimum credit score. Not upset about that. Yeah, so they go from 70 to 90, but 70% gets you all this. Mobile banking, that was a given. We saw that. It said no closing cost or low. Let me just look up get more from your banking with Advantage. Discover why Advantage Plus Rewards, best way to maximize everyday experience. So this is interesting as well. I mean, let's look at not just the home equity line of credit, but look at all this other stuff that they're adding in here. They're giving me a 5% APY on checking. What do I got to do to earn that? Earn more. Enjoy our highest checking rate. No minimum balance. No monthly maintenance. Are you kidding me? Maximize convenience with zero hassle. So look at that as well. I know we're focusing on HELOCs, but you see here how up to 1% APR loan rate discount. So let's say you get the HELOC, you're doing velocity banking for a few years. While you're doing velocity banking, let's say you're saving money on the side. You could be earning 5% or 3.5% on balances of 10,000 and above. So you would store 5K in the checking at any given time. Once you get to that point, then you store money in the savings, you earn 3.5% there. Let's say sometime down the road, you need to get a car loan. Okay. You can get discounts of up to 1%. And then another 0.25% discount for automatic payments. So we're talking 1.25% total discounts on a car loan. So it's stuff like that where it's like you include the whole thing. Look at the full picture, right? That's not bad. I'm not upset. So Advia is competing for my Wisconsin residents. All right. So that was Advia. Let's go to page 2 of Google. Let's see if there's any other. What's this? Kohler. Hmm. 90%. They're not giving us any information. Let's go to CoVantage. Flex. Home equity line. Look at this. 6.25. Attractive, man. That's prime minus a point. Home equity flex line of credit. CoVantage. So I don't even need to know all the details, but it's enough to get on the board if you're offering prime minus 1 full point. So that's all I'm gonna write. Not upset. CoVantage. Wisconsin Bank and Trust. What they doing here? 2.99 for 6 months. But that's a pretty high, prime plus 1. Don't know if I love that. Don't know if I love that. The lowest they go is prime plus 0.25. Nah, I'm not going to put them on the list. Not horrible, but I got better banks. Fox Communities Credit Union. Let's see what they're doing. 90%. View rates. Home equity line. Okay, so prime. 725 plus credit score. I'm not sold. Not sold. Heartland Credit Union. Uh-oh. 6.99. Do they have an intro rate? 100% LTV. Not fully sold on Heartland. Green State. I know I'm going fast. Bear with me. Oh man, they won't even let me look on their site. Can I get around it? Dang it. They're not letting me on their site. I gotta put a zip code in. Central Wisconsin Credit Union. See what they got. Home equity. 7.25. So that's just, boom, prime minus 0.25. So you'd be at 7%. The site is a little sus, right? This site looks like it was put together by not even a college student, like not even a middle school student. Middle school student could do better than that. I don't know who did that. A senior put that together, that website. So home equity line of credit. We might be digging too deep at this point, to tell you the truth, because we are on page 2 of Google. And how many of you ever venture to page 2 of Google? Very, very few of us, right? But notice how these sites are like weak. So chances are when the website looks like there's no love put into it, I don't know if the product will be any better. I don't even think they offer a HELOC. So I think we're good with what we have on the board here. Not upset at all. I like what we see for Wisconsin. Wisconsin is competing right now. It's awesome. So if you live in the state of Wisconsin, these are the banks you want to have your eyesight on as it pertains to getting a home equity line of credit in the second position. Let's do our ranking now. So this is tough. This is actually really tough. We have 2 banks that are saying we'll give you 0% for the first 3 months. You know what 0% means? It means like nothing's going to be owed if it's an interest-only HELOC. Now, granted, that's not what we'd be doing. We're going to be doing velocity banking. So 100% of your money for the first 3 months is all principal pay down. So imagine consolidating like 5, 7, 10 credit cards at 25+% to 0 for 3 months. How much debt can you eliminate in the first 3 months? Then it jumps to both being at prime minus 0.5%, so 6.75%. The draw periods, I believe, were 5 years, but with UW, you could renew twice. Then where I think UW is outperforming Summit Credit Union is on the LTV and the fact that you can renew 2 times. I think that's where it wins. So you can put Summit off to the side. UW is doing well. Now, let's say, and let's illustrate this. So we'll just I don't want to cross it out yet. It's so tough. We got UW so far outperforming Summit. Now we look at the Summit Federal Credit Union. 3.95 for 6 months, no closing costs, period. 85% LTV, I feel like that's the sweet spot in between 70 and 100. And the rate is at prime, 7.25. So in my opinion, although you get a longer intro and no closing, the fact that you are at prime, that 0.5% difference over the long haul of paying off debt, you could argue Summit or UW is going to be ahead. So in my opinion, Summit is beating both Summit credit unions. Coming to the right side, now we have an interesting proposal here. We have 2 banks that are offering a prime minus 1%. Out the gate, 6.25% versus 0% for 3 months, then prime minus 0.5%, 6.75. That 0.5% difference over the life of the loan, you can make an argument, I don't know how powerful 3 months at 0% is versus prime minus 1%. Now, there's some factors though. You need a 740 or higher credit score here compared to over here. I think it was around 700, 720. So you got to work a little harder to get this. It's 80% LTV compared to 100% LTV. And there could be some closing costs with Landmark. So for that prime minus 1%, as much as I like it, I think I get more value with UW. And you let me know in the comments, out of what you see here with Wisconsin, which bank are you gravitating towards most and why? You let me know. If you're not in alignment with me, let me know. Or if you're backing me up, let me know. Next we have Advia or Advia. I don't know, I'm gonna go with Advia Credit Union. Very interesting proposal. Very interesting proposal. No closing costs. 70% LTV, so much lower. Prime minus 0.5. But we get 5.9% for 12 months. 5.9% for 12 months, then prime minus 5. So I would be at 6.75%. Very similar to Summit Credit Union. A lot can happen. A lot of damage can absolutely be done at 5.9% for 12 months. So this, the way you decide, is going to be based off of the immediate result that you're looking for. So if you're looking for more immediate results within like a 1 year time frame, one-ish, maybe a little bit longer, you might gravitate a little bit more toward Advia, because you could argue, yes, although 0% for the first 3 months, then I jump to 6.75, so it matches the prime minus. Prime minus is matched, yes. But over here, I get that 5.9 for 12 months. So I get locked in. The con for Advia is the 70% LTV. You got to make sure you have enough equity in your home. So sometimes what's going to end up happening, the way you decide, a big factor is going to be how much equity you actually have in your home. So if you don't actually have a whole lot of equity in your home, Advia, Landmark, Covantage, Summit are probably going to be off your list. Oh no, Landmark was 80%. So you're probably going to be left with Landmark, the Summit 85, and UW at 100%, and you might land with UW simply because of one factor, LTV. And that's simply because you didn't have a whole lot of equity in your home. But then guess what? I mean, you're not losing 3 months, 0%, and then prime minus 5.5. Not upset. So overall, my top 2 picks out of the 6 is going to be UW and Advia Bank. Very attractive options. I get a longer intro rate, same prime minus 0.5%, no closing costs, 70% LTV, mobile banking friendly, draw period I believe was 10 years. I can't complain. The other thing that Avia was really competing with was all the other features that you get. So you can be earning 5% on your checking account up to 5,000 bucks. Then 3.5% on a high yield savings. So as you begin to pay off more and more debt, you're going to unlock more and more cash flow. What we eventually want to do as we're accelerating our debt is then start to build up our savings. When we build up our savings, we then prepare ourselves for what? Cash value life insurance, funding whole life, and or investing in you, in the things you know and understand that you want to get involved in. So I hope this was really helpful. I'm going to stop right at the hour mark here, coming up in just a minute. Jesus says, I'm glad you're doing these series so people don't have to keep asking about credit unions in certain states. Yes, Jesus. And hey, whenever you're watching other YouTubers and you see a comment, you just be like, yo, Denzel already did a video on that state. Boom, go here. So my hope is that I want to create like an archive of content for each state in America. So it makes it that much easier, because the reality is for each state, there really is only a handful of banks that we as Velocity practitioners want to even have our eyesights on. And banks will compete back and forth. But the other thing that's happening that we need to be aware of as Velocity banking practitioners, what we've seen in the last decade or so, more and more banks are closing. Banks are getting bought up by other banks. So we do want to keep an eye on the fact that more and more banks are shutting down. Now, as a customer, what you can do to actually reverse that, to keep the small bank open, is to do business with them. And these smaller credit unions, these non-for-profit banks, all of their products are set up to benefit the residents of that particular area, because that's the only way that they can compete with Bank of America, with Wells Fargo, with Chase. Make sense? So many of you that have been doing business with Bank of America, Chase, Wells Fargo, for 10, 20, 30 years, you need to divorce these banks. Divorce these banks. They're not helping you when it comes to velocity banking. When it comes to accelerating your debt, they're not helping you. But these banks, these smaller banks, look how awesome these offers are. Where can I get 5% APY on a checking account? And then 3.5% on a high yield savings and a 5.9% interest rate for 12 months. I mean, do you understand how much debt you could pay off in just a short period of time? It's pretty awesome. And let's say you're debt free. You could be using these tools to leverage capital at low interest rate costs, create more cash flow through real estate, your business, or some type of an investment. So to close out, for those of you that want one-to-one lifetime coaching with me, I'm going to keep doing live streams just like this. This link provides a $600 discount only for people who are doing the work with me, going state by state until I cover your state. So thank you if you're tuning in and you don't live in Wisconsin, but this is still super helpful for you because you get to see where my eyes go when I'm looking at each bank and what I'm reading. So you're going to get that same skill. It's going to save you thousands of dollars by the time you go ahead and apply. And on top of that, for accountability, support, one-to-one strategy sessions, case studies, running the numbers, documenting it, I can then come in and continue to support you on your debt-free journey, onto your retire early journey, onto ultimate financial freedom. So that link, again, is only active when I'm live. I'll close it, so you'd have to be present with me live to get that offer. And with that, we'll close the evening. I look forward to next week when I'm going to keep doing this, try and go live as many times as I can. And my goal is to cover every state in America. So with that, God bless you. Enjoy the rest of your evening, and we'll be talking soon.